The president's signature on the banking law has left confusion in its ink trail, even to the central bank governor's admission.
Yes, it has complicated monetary policy. You do not know what happens with the riskier borrowers who are, let's say, at the margin of the cap, where the cap is, and they may just be cut off.
One of the areas that has been a grey one is microfinance loans, and if, for instance, mobile-based loans are subject to the interest rate regime, which limits these rates to 4% above the central bank rate. While the central bank called for a press briefing where it was hoped that these and other issues would be clarified, the matters remained as opaque as before.
Then microfinance, all these questions, I'd rather not talk about them now. I have deliberately stayed away from it. Yes, we see all these concerns and so forth, but I think this is not the moment to in a sense, weigh in.
Another grey area was what the base rate that the Act speaks of actually is.
I do not want to answer that question because yes, it is. The law it says the cap should be CBR plus 400 basis points.
This may be considered debatable, bearing in mind the confusion in the weeks after the law was signed, with different banks opting to interpret the laws with different base rates in mind. Banks said that they had been waiting in vain for the regulator's direction until clarity finally came last week. Some have sued CBK, saying that loans should be based on the Kenya Bankers Reference Rate. The CBK governor is often clear and detailed in his explanations of various issues, as was seen in the cases of banks being put under receivership. However, on this law, which he was openly against, he fell short of this, having left some issues in a basket of vagueness. Yesterday, the CBK's Monetary Policy Committee reduced the CBR to 10% from 10.5%, partly as a result of what they observed as reduced private sector borrowing.
Actually, this has come down from about 18% earlier in the year to now something like 7.07. 12 to 15% is where we expected it to be.
Njoroge holds that banks may be having some foul play in their submissions.
Part of that could be a numbers problem, meaning the numbers are wrong, meaning the data issue. We are not completely convinced that it is not. There isn't some data issue, so we need to continue digging there.
There has been talk of banks introducing new charges to make up for what they will lose out on as a result of lower interest rates. They have to, however, pass this by the CBK for approval. Njoroge says that there has not been a rush of requests to increase charges.